So wrapping up everything that we've discussed today, we understand it's very easy to fall into that mentality that because the labor market is so strong, that we can continue on this economic expansion, regardless of the fact that the Federal Reserve has embarked on the most aggressive tightening cycle that we've seen since the early 1980s. We just think that's a little bit too optimistic. Remember that monetary policy acts on a lag. The labor market is typically the last thing to go in an economic downturn. And then the tightening of the lending conditions, that's a big impact on economic growth that we haven't even seen yet in the economy. These are all things why we're a little bit cautious on the economic outlook. This is also why we are cautious on our asset allocation and what we're recommending for portfolios. Don't follow and chase momentum. This is not the time to do that when there's still so many economic uncertainties and even monetary policy uncertainties. It's not the time to chase high value theories that people think will just materialize if you just throw money at it. Fixed income's finally getting interesting. We're still looking for other opportunities there. And alternatives we think are a great spot in portfolios as well. Now, as always, we will continue to assess everything that's going on with the economy as well as the Federal Reserve. We'll make adjustments that we think are necessary in the portfolios. And if you have any questions at all about our outlook, please feel free to reach out to your financial advisor. I'd also like to invite you to subscribe to our most recent podcast, Markets with Megan. That's going to be a real-time, regular podcast on the economic data that you see, the headlines you see, some of those market-moving events. We're going to try and decipher between what you read in the headlines and what the real truth is behind that and what it can mean for your asset allocation. Thank you again, and we'll talk next quarter.